Mitch, welcome to the show for the first time.
Yeah, thanks for having me. I like following you on Twitter as well.
Thanks so much. Now, just getting right into the picture right now, we're going to lead off by asking you what you think of the technical damage that's taking place in weed stocks. I know you're a principal on the American side, so you focus more on U.S. MSOs, and the moves there haven't been quite as dramatic as what we've seen in Canada. But what is your big take on both sides of the border?
Well, if I was going to comment just broadly on the markets, I think one of the interesting things that's happening is you're seeing a huge destruction of value that even if stocks were overvalued going into the Canadian recreational, which is really the beginning of the downslide, the moves in stocks don't make a lot of sense given the regulatory tailwinds that now exist or the development of businesses that are now moving so quickly. When you think of whether it's a Canadian company like Cannabis, who now will be harvesting every month and producing product and revenue that will be sold in stores across Canada, all the way through to whether it's Cresco Labs, Curaleaf, MedMen, all the MSOs in the United States, those are companies who have spent a tremendous amount of CapEx to develop businesses that really are just getting their feet underneath them in 2019. So the amount of revenue growth, which will be spiking in 2019, the lower CapEx expenditures as these companies hit a normal operating process, it's really baffling that the stocks are getting hit this hard. Even ancillary companies that we own, like Kush Bottles or Grow Generation, it's amazing that states can pass laws or the government can pass laws like the Farming Bill or what we think will pass in 19, the States Act, and that basically opens up entire markets for ancillary companies, whether it's lab testing or packaging or hydroponics, someone who does marketing or all kinds of businesses that support cannabis businesses compliance. Again, another example. And it's unbelievable that these addressable markets are moving forward and that the stocks are taking such a hit in a broad way. And I'll just make one point. It really is a new paradigm, even if it feels like the last year or two is 20 years in an economic cycle. The reality is cannabis is really early, and there's never been a substance, a service, or really anything in the history of the world that's been so used so broadly but illegal, and that's moving to a legal market. So it's not like a market that needs to be created. You essentially have substances like cannabis that are being used. It's being used hundreds of billions of dollars of a market that's going into the light. So we think that in the short term, sure, the stocks are volatile and they're going down, but long term, if you look at today and you can just fast forward to August or September of 2019, I think people will be really surprised by how large some of the revenue bases will be going forward.
So how much does the broad market weakness in general in the S&P 500, NASDAQ 100, how much does that play in your decision to invest right now and or lighten up on positions right now? Because as you know, I think a lot of viewers and investors know where the market is going, but are trying to digest, how the multi-asset compression and valuations throughout all these sectors is going to affect weed stocks and marijuana companies, because the two are inextricably tied together. So it seems to me that there's almost like the great pull of what is to come versus multi-asset compression on all sectors if we do get a recession. How do you reconcile that fact?
Well, one thing, I think a lot of people are interested in the cannabis trade primarily because it's decorrelated. Regardless of whether the NASDAQ goes up or down, cannabis companies are really not tethered to broader economic activity. That's one of the attractive parts. Having raised funds privately in Merida for the last 2.5 years, we've always been intrigued by people of high sophistication asking, well, how correlated are you to the broader market? Obviously, stocks are broadly correlated. In general, if people are feeling negative about Microsoft, they may decide to lighten up on positions across the board. But cannabis, the way we invest is primarily privately. So we can ignore a little bit of the stock activity. I do think one thing we've always marveled at in the cannabis industry is the manic nature of the providers in the space and even the public companies now, because there's so many more. This is such a rare phenomenon in the space. A year ago, there might have only been 5 or 7 different ways to play the public market. Now there's hundreds. And what you notice is that if you're at a big conference like the MJ Biz conference in November, or Benzinga that was in Toronto, I think in August, people were really excited because good news was coming out at that moment. I think in the Benzinga conference, it was August. It was right after Canopy and Constellation had announced a deal. And obviously in November, Canadian Rec had just gone live. So people were really excited. All of a sudden, stocks go down, and even if private companies continue to make great revenue, and as your guest before, Smoke Wallen, who I know pretty well, said, and by the way, it's interesting that he did it from, I think, a Chick-fil-A or something, so I'm jealous of him. But if you talk to Smoke, you'll see that the economic activity in the space is continuing apace whether or not stocks go down. In terms of the multi-asset compression you speak about, we obviously look at broader headwinds in the markets because you just have to be cognizant of it, especially for us. We have more than $100 million exposed to the space. So we're obviously watching those things, but we don't feel like if the economic activity of the space started to see a decline, and if we saw the compound annual growth rates dropping and pure economic activity dropping, then it would be something for concern. It's quite the opposite. Just recently, New Jersey gave out new licenses. That's a total new market, right? It's going from 6 to 12 operators. Many states, Missouri, Utah, deep red states in the United States passing medical laws. So what we try to focus on in investments is what's the opportunity. We try to ignore the short-term either headwinds or tailwinds and really focus on the impetus behind an investment we make. So it could be that it's idiosyncratic to compliance or new rules that are coming out in California, which underpin some of our investment in Steep Hill Labs, which is a large lab testing company in California. So we try to look at those specific opportunities, and we try to ignore the manic nature that everyone, the sky is falling, because the reality is, while stocks are very painful, they really only affect traders. If you're an investor and you have a more of a long-term greedy mindset, then you're not worried about short-term moves. And in fact, this could be one of the greatest entry points going into 2019 when we think revenues will start to reflect the greater development of supply chain and the economic opportunity that people have been working towards for the last 2 to 3 years.
Mitch, Ed Molesky here. Recently, it was said that the marijuana industry was about the size of the wine industry in Canada, and I know you're in the United States. So, but the question I have is, it occurred. You talk about the marijuana companies and their market caps, and we talk about maybe a market caps of 50, 60, 70 billion, and yet the industry they say is about maybe 5 to 7 billion. Like, what do you think a reasonable multiple to revenues would be in this kind of a growth industry? Is that a fair question?
Oh, it's an absolutely great question. It's what we get paid to actually do by a lot of sophisticated folks in both the United States, Canada. We have investors from Australia. Really, the question, it's really hard to answer in any one specific. You have to look at the cannabis sector as a bunch of different verticals. So I'm assuming you're asking primarily on the cultivators or the operating companies who are public now. So when you look at companies like that, you really want to focus on, again, the opportunity that they're in. So if someone is in one state in the United States, then I would probably give them a much lower multiple than someone who has a broader base of diversified opportunity. But a company like Canopy or a company like Kronos or Freya, those companies those are more global plays at this point. So when you're investing in those companies, you're investing in not only the Canadian opportunity, but their ability to have invested smart across jurisdictions that span, and Tilray is a great example, is 12 different countries, I think, at last count. The multiples in the space probably got a little ahead of themselves because people they almost wanted to capture the value that's going to exist today. I mean, that's the way markets are typically. A stock market, it's like a photograph. You only really know a price at that one moment. You don't get a chance to see what happened before or after. And I think because of that, a lot of people tried to position themselves as, if I buy at these levels, then things can only go up. But if you're getting so far ahead of yourself in a valuation where you're trading at 30, 40, 50 times revenue, it's hard to justify that. Long term, I mean, think of it as any normal business. You want to be able to invest at levels where you know the amount of cash flow and net profit can equal, in a few years. It's like buying an apartment. You're not going to pay 75 times the annual rent. You're going to pay, maybe a couple times annual rent because you want to get your money back in some reasonable period. So I think what happened, and it's actually, we're seeing the damage here, and I actually wrote about this, ironically, when Canada went rec, we wrote a short commentary that went to the market, and one of the things we pointed out is when the rules are changing so quickly, it's really difficult to predict what valuation should or shouldn't be. And the rules are changing extremely quickly. I mean, the States Act in the United States could be a huge driving force behind value that we just won't know when that gets passed until it actually gets passed. The Farm Bill is a great example. If that should be driving companies forward, all of a sudden there's going to be millions and millions of dollars of CBD tested, of packaged. It's going to be infused into products. And so that's a huge opportunity for companies in the space to reduce their cost, to create higher CBD ratios. That's a really undiscovered fact that we don't know what that will do to multiples. So the multiples got ahead of themselves. But I think it's fair to look at a lot of these businesses as growing faster than almost any industry, if not actually any industry. And that if you're buying in companies at multiples where you feel that their growth rate and the amount of profit they can produce over a 2, 3, 4 year period justifies, with some multiple attached for growth and other things, if it justifies that, then that should be a great investment. We invest primarily in ancillary companies. We do own some growers. We think that those valuations are going to be a mixed bag, but in terms of ancillary companies, we think in many cases the ancillary companies broadly are undervalued, primarily because of the effect on the stocks that are publicly traded over the last 6 months. We're shocked that those stocks have barely moved forward, and at a time when the regulatory headwinds have become tailwinds. That you look at total addressable markets that are multiples where they were just 6 months ago, and yet those stocks have either stagnated or gone down. And these are not usually CapEx intensive businesses, so they don't require a ton of spending either. So it's not like they're going to keep going to the market. Like, I think one of the things that's actually hurting the multi-state operators for the most part is the examples of the multi-states or of Canadian companies that really need more capital constantly, and people being fearful that if that capital has to come at lower levels, it could have a spiraling effect on their equities, which further drives down valuations. But given where these companies are and the opportunity in front of them to either be acquired by large-scale companies, as you noticed in wine or spirits, it really is, for us, we're surprised that valuations are getting this rational this quickly. And we would, if we were traders and we're not, we would potentially look to get heavy on ancillary names that have large addressable markets, because the laws as they pass really do provide an amazing foresight. Sorry about that. They provide an amazing foresight into the future, and the future for these companies, MSO, Canadian grower, or ancillary companies, is massive.
Excellent. Well, Mitch, we're going to leave it there. Great inaugural interview on Midas Letter. We hope to have you back. That was a great update.
Hey, thanks for having me, guys, and everyone. Just take heart. The stocks will look a lot better, I think, by the middle of 2019.
Terrific.
Thanks, Mitch.
All right, thanks, Mitch.
Thanks a lot.